Hello, everyone. It is Tuesday, the 15th of March, 2016. It's 8 a.m. Chicago time. Thanks for joining. This is another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The market's in an interesting stance right now. Oil being down another 2% today. Gold slightly down. The Treasury bonds are up. 10 slightly up. The Bunds are flat. The Nikkei down. Hang Seng down. Shanghai flat. The Japanese yen up. The DAX down. FTSE slightly down. The CAC 40 down. The S&P 500 futures slightly down. And the dollar is virtually flat to slightly down. So what this tells us is the overnight sentiment. The overnight stance is a risk-off stance. It looks like money is moving into treasuries. So overall, the market's taking on a cautious stance. We just got some economic release numbers from the U.S. We got the advanced retail sales came in at negative 0.1 versus negative 0.2, slightly better. PPI final demand in line at negative 0.2, and Empire Manufacturing at plus 0.62 versus negative 10.5. First positive reading on Empire Manufacturing since last July. But still, the market has taken on a position that is more protective. So let's take a quick. Oh, by the way, tonight's elections in several states, including mine here, Illinois. We have primaries here, and for the nominees for the Republican Party and the Democratic Party. And tonight, you might want to watch these elections because this may lock up the nomination by Donald Trump. And the expectation is that the markets this evening are likely to react as those results come in. You might want to keep an eye on that if you hold positions overnight. I'm not sure what the reaction will be. This here is a 10-year note chart. This color's terrible. Let's darken that up a bit. So this is a 10-year note chart, and what I wanted to show you here real quick is how this stance is playing out. The 10 years went and made an all-time high basically back in the beginning of February, about 3 weeks ago, and they've been falling off. The falling price of the 10-year causes yields to go higher. And this morning, if you look closely, even though it's been pulling back, it pulled back to prior resistance here, which is now around support. And we're approaching this high volume node here just below us. So the 10s are moving into this high volume area and back to where they were balanced. But for now, let's take a look at what it's done today. Today, this is a 60-minute chart. You can see that today it is really popping up. It is really popping up. The last time we had this kind of volatility was last Thursday on the ECB announcement, but very, very strong today with point of control pushing near highs. The 10 years look like they'll likely to continue to strengthen into the session, which could put a negative skew on what we're doing. In the S&P. Yesterday, our primary hypothesis was to be responsive back, was to open and be responsive back to the prior day's point of control. The prior day's point of control was 206.75. And the expectation is it would push back up to that prior point of control. The expectation also is that the market is likely to have wide rotations, but stay within Friday's range. It did not do that. We did have the wide rotations. The volume was fairly anemic yesterday. Volume was generally down about 30% versus The 20-day average, this is also odd because, yeah, I know there's rollover here, but rollover also brings in a lot of volume, and volume was just very was quite low, and overall it was a very quiet session. But overall, it took on a very positive skew after the European close. The market started rotating up. We ended up taking out the high of the prior day of Friday, which I expected to be a low probability play, and then the market ended up rotating right back to the confluence we had at the IB high of 2,875 with the mid and VWAP right there. The market ended up putting in a balanced day with an upward skew. We have a higher high, a higher low, but something to note: even though the price action shows a higher high and a higher low, we have basically the same exact point of control. The POC did not move. Balance is in place. This attempt higher was likely to fail under these conditions, and the expected rotation is lower in the overnight session. However, since even though it did go lower in the overnight session, it was not expected to drop down to where we are at 1998.50 currently. So overall, Hypo 1 did not play out. It played out fine for the morning, but in the afternoon, the market took on an uptrending skew um, on lower volume, but it did push out of the range, which was not expected. I was more willing to bet, even though we had a pretty weak high. I expected the market to rotate right in value and stay in that area yesterday. There just seemed to be no catalyst in the overnight session. The market just cannot hold prices at all. You can see that. Let's turn these off. You can see that it opened sideways, very quiet open, and then as the Asian markets kicked in, we have basically a cascading drop with a B-shaped profile, and the point of control is at the lows with a spike to the low, but the low is actually fairly weak this morning. I do not expect this low to hold. So with that being said, I'm watching 2003 this morning. That is the key LVN plus the mid of this session. Essentially, that's the area I'm looking for a reaction. It's also the low of yesterday at 2002. So if this morning opens up and it starts to push towards 2002, 2003, and finds resistance and falls back through, I'm looking to the short side, and I'm targeting the weak areas below, or the structures below, that still remain to be tested. We still have not entered um, the range from last Thursday. We tested the top of the range on Friday, missed it by a tick or two, and have continued higher. And notice that the overnight session stopped right at Friday's high, or Friday's low, and Thursday's high. So you could see that there's a clear line of support here. I'm expecting this line to break. I'm expecting it to attempt to go higher, find sellers. I expect it to rotate down, and then the big target becomes 1979.75 this morning for our primary hypothesis. So for Hypo 1, I'm looking for responsive buying into 2002, 2003. If it fails in the 2002, 2003 area, it's likely to drop through the 95.75. And if it does, then the expectation is the point of control at 1979.75. That gives us approximately 20 points of range, which is in line with a downward rotation. The secondary hypothesis is it does chop around, attempt lower, and then it moves in and through the value area low, which is at about 2003, and then starts to chop inside of the yesterday's yesterday's profile, and then moves back up to close the point of control and the gap above. The gap being right down here at 2009, a quarter or so, and that's the expected target on the upside. So that's how the two plans are playing out. We're still in the gap zone above. We're trading below it, but the overall market sentiment is on the downside, and the expectation is for that to continue given the overnight profile. The overnight profile is a big B-shaped profile, and the expectation is that it is likely to fuel. There's fuel there in the overnight session. That's likely to fuel us falling into the uh, Thursday range and into the 1979.75. That's all I have for you. Let's keep it short and sweet. Hopefully, you're coming up with your own plans every day and are waiting for the market to indicate to you which side is winning the battle before you commit your money to the market. Even if you're on sim, you want to trade it just like you would if you're trading live. So just make sure that you give the market enough time to make itself known before you commit your hard-earned dollars to it. Good luck, and I'll catch you tomorrow. Take care.